Understanding closing costs for a real estate transaction. Hi, my name is Roxanne Gavari with Pemberley Realty here in San Diego, California. And I've been in the business of selling real estate here in this town for 25 years. And over those years, we've had lots of transactions come and go. And of course, closing costs are one of those inevitable costs that you deal with. Now, let's talk about what those costs are and what you can expect to see for closing costs. So, in California, we transfer property through escrow companies rather than dealing with attorneys, and something that's more common on the East Coast. So on the East Coast, when you are purchasing a property, the agents negotiate the contract and put it together, and then they turn it over to attorneys, and the attorneys do the rest of the work. Here in California, agents do all of the work in terms of negotiations, in terms of doing requests for repairs, and doing everything in between. But the escrow companies, their job is to basically transfer the money from one side to the other, and transfer the title from the other side. So escrow companies' job is to get the money from the buyer, transfer it over to the seller, and get the deed from the seller, and then transfer it over to the buyer. And for that service, they charge. So escrow fees is one of the fees that you typically have. The other cost that you typically have is also title fees. So title is an insurance that you buy for the property. So for example, I was talking to one of my potential clients, and they were saying that the water has not been paid on the property that they inherited, and so the water company has put a lien on title. Well, a lien on title to the property is something that goes on as basically an encumbrance to the property, and that goes on title. So if there's a lien that's been formed, then that gets recorded on title, and that is something that if you have title insurance and you pull title on the property, then you're going to find out the liens that are going on the property. So liens are so that's the reason why you have a title insurance that you buy for the property, to find out who has claims onto the property, and how you can protect yourself from making sure that there are no creditors making a claim on the property. Some other closing costs that you deal with if you are the buyer. Your closing costs could be title fees, insurance fees as well. So title, escrow, fire insurance, and there you also have to have a natural hazard zone disclosure, which costs money. It's usually one of those things that the seller covers, and then of course, if you're a buyer and you're getting a loan, you also have loan fees that you have to pay for. So for example, you may get a loan that has an origination fee. Yeah, there's other fees attached to getting a loan. So for example, another fee that these days is very popular, and lots of people are looking into that to lessen the cost of their loan, and that is buy downs on the rate. So if you, as you know, right now the interest rates are pretty high compared to the average of what we have seen just a few years ago. So the seller can actually buy some rate buy down for the buyer. Like one popular product is a 3-2-1 buy down. And a 3-2-1 buy down is basically it basically means the first year the interest rate is 3% lower than you would normally get. The second year it's 2% lower than what you normally get, and the third year is 1% lower than what you normally get. And by the end of when you come to that 3-year period, then the loan resets to the original amount that you were supposed to pay, and the hope is that within that 3-year period, the interest rates will come down, and you're able to refinance into a lower rate that is more affordable. So that's the idea of a 3-2-1 buy down that you can look into, which of course is considered a cost into closing costs, and it's normally a cost that the seller incurs by paying that amount and giving that to the buyer. All right, let's see what else. Commissions. Commissions are part of closing costs as well, and you know, in the years, over the years, I've worked with a large number of for sale by owners, and when you're working with for sale by owners, that is one area of people that when you're working with them, they don't necessarily see value in working with an agent until they actually try to sell the house, and if they're not able to sell the house, then usually an agent comes in. But over the years, if you look at the entirety of the market, you see that working with agents and agents doing the real estate transaction is fairly common, and so are we necessary? I would argue to say we are, because if we weren't around, I tend to say we would have a wild west of a real estate market, and there is a lot of protections that we need to make sure that are in place. There's also a lot of actual sweat equity work that we have to do to make sure that that a property goes on the market and is sold for a good amount of money. So the commission and what we charge, the fees that we charge, is basically built into closing costs. Now, you could also argue that agents get paid a lot of money, but the reality of it is that agents don't charge per hour. They get a lump sum for all the work that they do, and because if you're going to basically measure their time for every little thing that they do, or if you go and become like attorneys where they actually bill for every hour that they work, I tend to actually think that you end up paying a lot more because there's so much work that needs to go into a transaction, and you end up actually probably paying more rather than less. But nevertheless, agent commissions are part of closing costs that we have to pay. Some of the other closing costs is taxes. For example, you buy the property on the 10th of the month, and well, the property closes on the 10th of the month, and then you are not going to pay mortgage for the property until the first of the following month. So for 20 days, you have the property, and the lender and the city where you're in and the insurance company that you're hiring. So insurance, taxes, and mortgage need to be collected for the rest of those 20 days until the end of the month before you start paying mortgage for the following month. And that portion of insurance, taxes, and mortgage are going to be part of your closing costs being paid up front. So when you're thinking of closing costs, there's all these costs that are, I guess you could say, hidden costs that you don't normally think about, that go into what you have to pay. And let me take a look at an actual transaction with you, so that we can also look at a contract and see if there's anything else that I might be missing and not including in our conversation. So I usually have a file that I use for training and education. So I'm going to get into my file and get into an actual contract, and then let's see what we see in terms of other costs that we can discuss and we can share. So let me do that now and show you a contract that we can share and go over together, and go over some of the other costs that are involved. So some of the other costs that are involved if you're purchasing and if you're a buyer, you would have to pay for inspections, and then depending on how that inspection comes, you may have to hire more professionals to investigate more, so that costs money. You also need to, if you're borrowing and if you're getting a loan, you also need to have an appraiser appraise the property, and so you need an appraiser to appraise the property, and for that appraisal you have to also pay separately. So that is also a cost that you deal with. So that is also a cost of closing costs that you deal with. And let's see. So you have the loan, you have the appraisal, you have insurance that's part of the closing costs. You have title insurance that's part of the closing costs. You have you also have a natural hazard zone disclosure that you have to pay for, which is something that the seller usually pays for, and the cost on that is minimal. But you definitely want to have this report, because this report basically tells you where the property is located, what are the hazards that might be present around the property that you want to know about. For example, is there an airport nearby? Is there an industrial facility nearby? Is there a earthquake zone nearby, which basically then means that you want to also make sure that you get earthquake insurance. All of these things are within your natural hazard zone disclosure. You also have supplemental taxes that you have, and supplemental taxes, I liken supplemental taxes to like sales tax. Like when you buy a shirt or when you buy a car, you pay a sales tax. Well, supplemental taxes are a one-time tax on the property, and it's basically the difference between where you are, where the seller was before, and um, where the seller was before, and where the other buyer is paying the property, and the difference between those two. That would be supplemental taxes. So let's see what else. What else in terms of closing costs? HOA fees. If you are selling a condo or a townhome, um, the lender would require you to supply, as a seller, you would have to supply um, um, HOA documentation, and that always costs money. And let's see, my colleague Leah's joining in. Hi, Leah, how's it going?
Hi.
All right, so we're going over closing costs. And I was just explaining what HOA costs are as part of closing costs. And the other one that we want to make sure that we mention is home warranty. So if you are a seller, you want to supply a home warranty to your buyer, because your buyer, they're just getting into a house, and they're not familiar with the house, and things may break down on them for that first year when they're getting into the house, and their budget is tight. They may not have a whole lot of money to fix things, and that's where the home warranty comes in. The seller provides a 1 year home warranty for the buyer, which is basically an insurance policy that the seller purchases for the buyer in the event that things break down in the house. So, there could be plumbing issues, there could be electrical issues, there could be other systems within the house that could break down, and all of that would be items that would be covered by a home warranty that the seller purchases for the buyer. And so that is also part of the closing cost that goes to the seller to pay for. And let me see. Is there anything else that I am not mentioning, Leah? Any other closing costs that you can think of that we did not cover?
How about the did you talk about agent commissions or title insurance?
We talked about agent commissions. We talked about title insurance and escrow fees. We
Mm-hmm.
talked about loan fees. We talked about taxes, insurance, and um, and I think we pretty much covered it all in terms of closing costs. Unless you have anything that you can think of that we need to bring into the attention of our buyers.
How about the natural hazard disclosure?
We did talk about natural hazard zone disclosure as well. Well, it sounds like we've covered it all. So
Yeah.
let's go ahead and share our information. So if you are thinking of buying or selling here in San Diego or anywhere in the world, you can reach out to me. I have my connections all across, and we are happy to help you get into a house or out of a house into a different adventure. And there's my phone number, and always happy to talk to you. And also, there's my email address. If you're on Facebook, there's my Facebook location. There's also our website, and also on Instagram. If you give me a follow on Instagram, I really appreciate that as well. And if you are watching this on YouTube, we really appreciate it if you give us two thumbs up and subscribe to our channel so that as we're bringing these videos to you, you get notified and you can join us. And until then, until next time, thank you so much for watching, and we'll see you soon.